Today, we're going to look at your backyard in a completely new light. Seriously, not just as a place to hang out, but as a potential financial asset. With food prices being what they are, we're digging into a really powerful question. Could a simple home garden actually be one of the smartest investments you can make right now? Let's find out. So, this is the question we're all wrestling with, right? Rising food costs, they're not just some temporary headache anymore. It feels like they're becoming a permanent part of our budgets. Now, the gut reaction is to just cut back, spend less. But what if there's a better way? What if instead of just playing defense against high prices, you actually started producing your own value? And that brings us to the new reality. The whole economic landscape for food has fundamentally changed. What we all hoped was just a short-term price spike, well, it's settling in for the long haul. And that's forcing us to think way differently about where our food comes from. This new reality is sparking a huge shift in our mindset. We're moving beyond just trying to save a buck here and there, clipping coupons and hunting for deals. We're moving towards actively producing value. It's all about building a system that gives you back some control in a market that feels totally unpredictable. Okay, but like any investment, this is going to require some upfront cash. And we need to be realistic about it. This isn't some magic trick for free food overnight. So let's break down what it really costs to get started. So if you're handy and you want to do it yourself, you could be looking at an investment of around $600. That'll probably cover the wood for a raised bed, a bunch of good quality soil and compost, and some basic tools. And as we're about to see, this is one of the most efficient ways to do it. But maybe DIY isn't your thing. If you want to go for a more premium, turnkey solution, or even get a professional to install it for you, that number can easily jump to $1,800, or even more. That's for folks who want a really solid, long-lasting setup from day one. And when you really factor in everything, the bed, top-notch soil, compost, all the seeds, all the basic tools, your total first-year investment for a good-sized, say, 100-square-foot garden could hit $2,500. The main point here is this is a real investment, not just some small hobby expense. But this is where we have to totally reframe how we think about this, because once that initial investment is made, the garden stops being just a cost. It actually transforms into a productive asset. And let me show you exactly what I mean by that. This slide nails the conceptual leap we have to make. When you buy groceries, that money is just gone. It's a sunk cost. It's a one-time transaction. But when you invest in a garden, you're literally building a small-scale production system. It becomes an asset that keeps generating returns for you, season after season. Now, let's look at how the numbers play out over time. It's pretty amazing. As you can see here, after that initial setup, your annual maintenance costs for things like new seeds and compost can be as low as $150. But that tiny ongoing expense, that little bar, can generate up to $1,000 worth of fresh produce. The big bar. I mean, that is an incredibly powerful return on investment. So let's get into the hard numbers. How do we actually calculate the return on investment? And maybe more importantly, when does your garden stop costing you money and start saving you money? We're talking about the payback period. This chart really lays it all out. In year one, growing your own food has that big initial cost, so your savings are pretty low. But look what happens in year two and beyond. The initial cost drops to zero. Your only expense is that small ongoing maintenance. Meanwhile, the person still going to the grocery store is paying full price and dealing with inflation. Your price stability goes way up, and your long-term savings, they just take off. And this brings us right to that idea of the payback period. Just think of it like this. Year one is your investment phase. That's when you're putting in the capital. But starting in year two, you enter the compounding savings phase. Every single vegetable you pull out of that garden from that point on represents a direct compounding return on your initial investment. Okay, so you've made the investment, you're in the savings phase, awesome. Now, how do you manage this new asset to make sure you're getting the absolute best financial return possible? Well, it all comes down to a few smart, strategic choices. This is exactly why we focused on raised beds earlier. From a pure financial standpoint, they're a much better bet. Why? Well, first, higher yield. You can get up to 4 times more food in the same amount of space. Second, you have total control over the soil and pests, which massively reduces the risk of a failed harvest. And a failed harvest is a lost investment, right? And all that control leads to predictable returns, which is what any investor wants. And just like picking stocks, not all vegetables are created equal financially. To max out your ROI, you want to focus on the high performers. Think leafy greens that you can harvest over and over, high-yield plants like tomatoes, things that are really expensive at the store like fresh herbs, and crops like peppers that have a great price-to-weight ratio. These choices directly pump up your bottom line. And then, beyond the direct savings on your grocery bill, there's what you might call a hidden dividend. Growing your own food gives you complete control over its quality, its freshness, and while it's more of an indirect benefit, investing in your long-term health is one of the most powerful financial moves you can ever make because it reduces future costs way down the line. This quote really just nails the whole idea of what we've been talking about. In the economy we're living in now, being able to produce something for yourself, to have some say in your own food system, that's moved way past being a quaint hobby. It's a serious financial strategy.
So, we'll leave you with this final thought. As prices keep climbing, you can either just be a passive price taker, absorbing every single increase that comes your way, or you can become an active investor in your own food security, gaining back a measure of control and building a productive asset for your future. The choice is yours.